So you want to be a day trader, haha. Now, I would appreciate it greatly if you could click on down below and subscribe or click on the bell icon. We promise not to bother you. We'll just send you a ping whenever I upload a new video so that you can watch it. And it's very important to me that you do subscribe. So thank you very much. So let's get started talking about day trading, haha. Now, day trading is a term that many of us don't exactly know what it is. Many of us just hear it and we just think of it as encompassing all types of trading. But day traders are different from investors in that day traders hold their securities for only one day. And the rule of thumb with a day trader is every position must be closed at the end of the day, and they go to sleep with nothing else on their mind, and they wake up and start fresh each day. Now, long ago, when we first started having day trading, when you saw all those ads in the 80s and everything, but people sitting on the beach saying, I'm trading online, day trading, making a fortune, that's a bunch of bull. But you actually had to declare yourself as a day trader to your broker. And if you did not close all your positions, throughout the day, and anything was left open at 11:59 at night, it was automatically closed by your broker. And there was a lot of rules and regulations, especially issued by the government, to classify you as a day trader. Now, the short-term nature of day trading reduces some of the risk because there's no chance of something happening overnight that can cause you big losses. You can go to bed with peace of mind. But on the flip side, the day trader's choice of securities and positions has to work out in that single day. And that's kind of difficult. But there are certain strategies that can be employed for day trading. But of course, if the market's slow and not moving, it's kind of a difficult day for you. You have to pick assets that have volatility and are moving because you're looking to make short amounts of movement in a very short time to make quick little profits. So when you take up day trading, the rules that may have helped pick stocks or find great mutual funds over the years will no longer apply. This is a different game with different rules. And day trading is a crazy business. And day trading does not lend itself properly to part-time traders. Traders work in front of their computer screens reacting to blips, and each of which represents real dollars. They make quick decisions because their ability to make money depends on successfully executing a large number of trades to generate small profits. But those limits on risk can also limit profits. After all, a lot can happen in a year if you're investing as opposed to trading. But in a day, you would have to be patient and work fast. Some days, there's nothing good to buy. Other days, it seems like everything you trade loses. So remember, each trading day is different. And traders who find 2 days in the market will never find them exactly alike. But there are things that keep them in relationship to each other. Day trading was originally available to financial companies because only they had the access to the exchanges and the market data. Now, there are several different styles of day trading suited to each trader's personality. The styles range from short-term trading such as scalping, where positions are held only a few seconds or minutes, to longer-term swing trading or position trading, where a position may be held throughout the day. So, in general, we have swing traders and day traders. But this is the world, the old world. We still use these terms. We still talk about day traders and swing traders, as that's all that there is, and that we all want to be classified. Okay. Swing traders can hold a trade for a day, an hour, a couple days, 3 days, 5 days, 7 days, to whatever they had imagined materializing happens. So swing trading is a little bit less demanding than day trading. And this is why I say, so you want to be a day trader, haha. It takes a certain amount of, a certain person, a certain personality, and it takes intense mindset. You know, those days where you used to see pictures of people sitting on the beach saying, I'm a day trader, I'm making a fortune, getting rich. That was just scamming and conning. It doesn't happen. Day trading is a job. And most day trading cannot be done by part-timers. Because there's different markets and different action. When you have to have your trade closed in that day and you're looking for little movements, you can't be sure that that little movement will happen at 9 o'clock in the morning or at 4 o'clock in the afternoon. So first, let's be clear about what day trading isn't. It's not investing, which is the process of buying a stake in an asset that will hopefully build a profit over the long term. How long is subjective, but investors generally hold assets for years and even decades, and they're usually concerned with the business they invest in. They are looking for companies or assets that will make solid profits or pay off and move in the right direction. And in between the two extremes, investing for years and trading for seconds, exist other investment horizons and other types of trading. And this is what I would like you to think about and get the term day trading out of your head and think about online trading or CFD trading. Because the rules are basically, the general principles are basically the same. Always respect the market. Never overtrade. Don't lose more than your initial, or don't invest more than your initial capital. Always trade with stop losses. Always watch the trend. Always do homework. Always book profits. There's lots of rules that follow, and in CFD trading you have, number one, leverage. You can go short or long, and you have to build strategies. But CFD trading allows you to keep your trading open overnight, the next night, for the next night, for the next. There's no time specification, so to speak. Now, most CFD trades are closed within the same day, and those that aren't, 50% of those that aren't, are closed the next day. But you have no requirement. So you should think about becoming a CFD trader. CFD trading is ideal for investors who want to make an opportunity to try and make a better return on their money. However, it does contain significant risk to your money and is not suitable for everyone. We strongly suggest trading on a demo account before you try with your own money. Now, CFD trading may be ideal for people who want assets that they can typically held over a few days or weeks better than long term, who want to make their own decisions. Now, most platforms provide only an execution-only service. You get a platform, you can generate your own sets. You click buy, you click sell, you put your stop loss, you take profits. And you can be active or you can be passive, and you can trade as much or as little as you want. The other thing about CFDs that's really nice is that you can buy it in small increments. You don't have to buy a whole contract. You don't have to buy a lot of shares. Today some of the shares are selling for $200, $300, $400 a piece, and you have to buy a round lot of 100 shares. That's $40,000 investment. Well, to be honest, if you want to buy Apple, you can buy $500 worth of Apple in a CFD trade. Now, contracts for difference are one of the world's largest growing trading instruments. A contract for difference creates, as the name suggests, a contract between two parties speculating on the movement of an asset. The term CFD, which stands for contract for difference, consists of an agreement to exchange the difference in value of a particular currency, commodity, share, or indice between the time in which the contract is open and the time in which the contract is closed. The contract payout will amount to the difference between the price. So let's use an easy one, gold. You sell gold in the morning, gold's trading at $12.50, and you sell it because you think it's going to go down. You sold it at $12.50. To close your contract, you have to buy it because you have to have a sell and a buy because they have to negate each other. And you buy it at $1,200. So what's your difference? The $50, because you sold it in the morning at $12.50. You had to fulfill that contract, so you bought it at $12 to fulfill it. You made $50, and that was the price going down. If in reverse, you bought long, you bought it at $1,200 this morning, and you sold it later in the day at $12.50, you made $50. You went either direction. Well, that's $50. But if you're using 10-to-1 leverage, for the $1,250, you could have gotten $12,500 worth of gold, and instead of making $50, you would have made $500. So you get the same leverage as you do in day trading. You get the same advantages, but if gold hadn't moved in your favor by the end of the day because something happened, or Donald Trump did something crazy, or something happened to him, you can keep the contract open till tomorrow, and when it hits that 1250 that you were expecting, close the contract tomorrow. So to put it simply, CFD trading lets you speculate on price movements of a whole host of financial markets such as indices, shares, currencies, commodities, bonds, regardless of the prices are rising or falling. CFDs are derivative products. This means that you don't actually own the underlying asset. You simply are speculating on the difference, and you have a contract based on that agreement. Because who's got the time to file ownership papers, to fill out all contracts? It is too time and it's too costly. This way, in CFD trading, your only cost is the spread, the difference between the buy and the sell. So if you want to learn more about day trading, forex trading, CFD trading, please see our other videos on my YouTube channel. And please subscribe by hitting the bell icon or the subscribe icon down below. I greatly appreciate it, and thank you for joining us today for our little class on